The Morning Drive is sponsored by Power Metallic. To find out more about the company, please visit their website at powermetallic.com. Follow the Money Investor Group is a 100% Indigenous-owned company and certified with the Canadian Council for Aboriginal Business.
Rick?
Good to see you.
Absolutely. Again, yeah. Thanks for doing the morning drive. We're here in New Orleans.
Great city.
I saw you at Manning's for the Blue Jays game.
Yeah, my CFO is not happy.
No.
He's a diehard fan, and
Yeah.
I didn't want to see him cry, so I left.
Heartbreaking, but good entertainment value.
It was a good game.
Yeah, you got your money's worth for that one. Because you were like, you weren't picking a team, right?
I wasn't picking a team. I'm not a Toronto fan, and I'm not really an LA fan either. So I was just like, oh yeah, this should be a good game.
You're just hanging out.
It was good.
Okay, so lots has been going on with the company since we've done a morning drive. Actually, it's been a while. You've raised some significant money. You have brought in some cash. Do you want to bring our audience up to speed and kind of talk about the plans and how you might be paying down some debt?
Yeah, so we've been paying down debt, delivering in the hedges. I mean, that's been what we have been 100% focused on for the almost a year and a half now that we've been in production. We started production July a year ago. We decided to raise some money because we really want to take advantage of this increased gold price to get our other things into production, Lucky Shot and Johnson Track. And we also didn't want to stray from paying down as much debt and delivering into the hedges as much as we can. So any extra gold that we end up producing in a quarter, which we're ahead of schedule, so all of that's been going into getting paying down debt, but also to delivering the hedges. So with that sort of as a backdrop, we said, well, if we keep doing that, we won't be able to work on our other projects until next year.
Yeah.
And we wanted to get started this year. And by next year, I mean like the end of next year. So
Sure.
that's why we raised the $50 million. We did that with two shareholders. So they align with that philosophy. So they're not sitting there, selling into and it was a warrant-free financing. So they're not playing that
that game.
That game of do the financing and then keep the warrant and sell the stock. So you didn't see the stock go down. It stayed where it was.
What was the cost of the warrant?
Well, there is no warrant.
No, but there's no warrant, but they were trying to get a discount, or?
Oh yeah, it was a 20% discount. Yes, it was a hefty discount.
Yeah.
So that hurt. But again, they're aligned with the vision of building our platform from 60,000 ounces of production today, currently from Moncho.
Yeah. Getting
Lucky Shot on track in 2 years, and getting Johnson Track on track within 3-4 years. So now you're producing 200,000 ounces. And with this financing, we don't have to dilute shareholders any further, because we have the cash flow. We're generating over $100 million from Moncho. We'll deliver into all the hedges by the second or third quarter of next year. We'll be done with all the hedges.
That'll be done.
That'll be done, and the debt will be paid off.
Can you explain, just some people might not understand, when you say into the hedges, can you explain that a bit?
Yeah, so we had to have about a $70 million line of credit to build our share of Moncho, to contribute to our share of this 200 and some odd million dollars of cash to build Moncho. And equity markets at the time, this was 3 years ago now, so the equity markets weren't there.
Yeah.
Gold was at $18.50, I think, and so in order to borrow the money, the banks made us hedge a portion of the gold, roughly 40% of the total gold in the mine plan. And so and we sold that gold forward at a $2,025 gold price. Again, gold is at $18.50. So
yeah, okay.
At the time, the equity markets weren't there. We would have happily raised equity, but if nobody's writing the checks, you can't get it. So
Yeah.
it was it was a natural consequence of doing a deal with the bankers.
Sure.
So that means every time we produce gold, roughly 70% of it goes to pay off
The banks.
pay off the hedges or deliver into the hedges.
Yeah. Okay.
That's why we say deliver into the hedges, because
Got
it's a pre-sale basically.
Sure.
So that's it hurts because obviously it would have been if gold had not gone up and gold had stayed at 1,800, we'd be really smart.
Yeah. Yeah.
But gold has done what it has done, which interestingly enough, it's not a bad thing for us. We're just not making as much money as we could have if we hadn't had to hedge.
Sure.
Right.
Well, and I mean,
We're still making money. Every ounce of gold we make, the hedges aren't underwater by any stretch, right?
Sure. But you're saying you're going to have paid this off or the debt off by Q3 of next year?
Yeah, we could actually pay the debt off now, but the hedges, it's a delivery schedule, so
Sure.
we're at least a quarter ahead in our hedge deliveries, and like I said, our objective is to just keep more aggressively. Every extra ounce of gold we have, we'll deliver into those hedges.
Yeah. No,
Obviously, we want to keep running the company as well, and
Yeah.
keep a good cash balance. But which is why again we raised the 50 was to get nicely ahead of it so that we can advance Lucky Shot. So right now, at Lucky Shot, we're drilling.
So how do you feel this story fits from a growth perspective?
Well, so we have 50.5 million shares outstanding, which I think by anybody's metric, I don't know another company that has that few of shares outstanding and is in production.
Yeah, and then how
So-
much do you own?
I own 6% of the company, and our board and management own 20. So we're definitely aligned with shareholders on this.
Yeah.
So when we look at our growth profile of producing 60,000 ounces of gold from Moncho, we had startup 30, 40,000 ounces from Lucky Shot, and we think we can grow that to 60 in a 2-year. Start up at 30 to 40, and then in 2 years grow that to 50 or 60. And then we add Johnson Tract 2 years later. You're now producing 200,000 ounces of gold. We don't have to raise more money. Our cash flow from Moncho and then our cash flow from Lucky Shot we'll have more than enough cash to get Johnson Tract into production.
Mm-hmm.
So you could look at from a cash flow basis, if we assume about $1,500 all-in sustaining costs, which is what our current cost is. I think Lucky Shot and Johnson Tract will be lower, but we'll just use that as an easy number. It makes for easy math too.
Yeah.
And we assume a $3,500 gold price, which I think is today certainly looks conservative.
Sure.
That's a $2,000 margin on every ounce of gold you're producing. If you're producing 200,000 ounces of gold, that's $400 million of free cash flow.
Yeah. So what are you going to do with that?
And you've got 50.5 million shares outstanding.
Yeah.
So we're going to continue to grow the company.
Right.
We see our DSO model, it is fundamentally different from what most everybody else is doing. And we see other opportunities out there. We see a few copycats saying, well, yeah, we're going to do the DSO model too. But it's like, okay, we'll go raise $50 million and get underground.
That's right.
So you can advance your project and do a proper feasibility study. Because no bank's going to loan you money if you don't do that.
Right.
So we believe in the Lassonde curve.
Mm-hmm.
Lassonde curve is real. And the only thing that's different from when Peter Lassonde made it in the 80s is that after the discovery high and reality sinks in and you have to do infill drilling and you have to do a feasibility study and you have to go get permits and you have to go raise money.
Yeah.
That time period in the 80s used to be 2 to 3 years. Well, that time period now is 10 plus.
Yeah. Because of regulations and stuff.
About a whole bunch of stuff.
Yeah.
And everything, as well as everything costs a hell of a lot more than it did in the 80s.
Has Pierre revised that curve chart yet?
I've revised his.
Okay.
I just made a longer. It's a big trough
Yeah,
now rather than a valley.
Yeah.
So rather than the valley of death, it's the killing fields.
Sure. I mean, it's tough, right? Because
It's
people
tough.
don't want to have capital sitting there doing nothing. There's a cost to that capital too. But, okay, so you're going to take, when you get this production, the pours, you get the money in, can you elaborate on how do you think you're going to grow the company? Like where can you,
Beyond what we are,
yeah.
our schedule now.
And maybe you don't even know, but
Yeah, we're looking at new opportunities. I'll say all the new opportunities we're going to look at are going to fit the same mold. They're going to have high grade. They don't need to be the biggest mine in the world. They just need to have high grade so that they can demonstrate that they can make money. They need to be, we like private land, or just land that we know we can permit on.
Sure.
I still don't think you can permit easily on federal land. I see projects that are finally now under the Trump administration getting permitted, but they've been in the process for
a while.
10 years. So until we get real permitting reform out of Congress, which isn't even meeting anymore,
Right. Shut down.
I won't change my mind on that.
Yeah.
And permitting reform has to include litigation reform, because right now NGOs have up to 6 years to challenge your permits.
Right.
That's
so
crazy.
They could hold you back.
Yeah.
Yeah.
And who wants to invest if you're just going to get shut down by a lawsuit? So,
That's right.
anyways, so for those reasons, we like private land. We like jurisdictions where you can.
Can I say something?
Yeah.
Who's lobbying to get that legislation into that? Is it anybody?
The mining industry, the National Mining Association, all the state agencies are like our Alaska Mining Association.
Okay. Yeah.
So yeah, and then there's a fairly substantial effort, but again, right now we don't even have the government to talk to. So.
Sure. Okay.
So those are the kind of new opportunities we're looking at to continue to grow the company. I guess the way I frame it is, right now we have a rock solid 5-year plan to grow our production from 60 to 200,000 ounces, our cash flow from $100 million of free cash flow per year to $400 million of free cash flow per year, without diluting shareholders. That's a and we can, obviously we got to execute. There's a lot of work to do.
Sure.
But we've got the resources to be able to do that. What I want to do is make a good 20-year plan. So those are the kind of new opportunities we're looking at. They're going to fit into that same high grade, close to infrastructure, relatively easy to permit. Nothing in the mining business is easy.
Yeah.
But you can kind of pick and choose and pick your battles, so to speak. And grade makes a big difference. If you're arguing over something that's 1 gram or less, you're on the margin. You gotta, everything's got to work just right, and your permitting has to fit, what your margins are.
Sure.
And because permitting there's a cost to all that, right?
Who let's talk about, since that stuff's so important. I mean, who's on the team that you can talk about that oversees this stuff?
Oh, it's a small team, but we've just all been doing this a long time. So, Lucky Shot, Chris Kennedy's my mine manager. He was the mine manager at Pogo for 8 years. Pogo's a big mine in Alaska, underground mine. And before that, he worked at Fort Knox and Greens Creek, so he knows Alaska really well. He knows all the contractors and all the regulators. So Chris Kennedy, he's one of our stars. Dave Larimer's our exploration manager. He actually worked with Chris at Pogo Underground. He was chief mine geologist there. He also worked at Red Dog. He also worked in Nevada for Nevada Gold Mines, the Newmont Barrick JV.
Yeah.
Solid exploration geologist, and ex-military, so he's a get shit done kind of guy.
Right.
And then we've just got we have a lands person, Alina Wyatt, who just she makes sure all of our contracts are in good order, and
Sure.
claims are filed, and all their paperwork's in order. It's just and then we have a lot of contractors that we use. We've been in the business a long time. My CFO, Mike Clark, I'm not sure if you've met him. Well, you met him at the disappointing game the other night.
Yes. Yes.
He wasn't crying yet, but
No.
he's a solid CFO. We worked together at Lexco. We sold Lexco to Hecla, so
Yeah.
we've been around the block a few times.
Yeah, he seems to know a lot of people, actually.
Yeah, Mike's our gadfly. He knows everybody.
Perfect. Yeah. So you're doing some marketing and getting the name out right now, talking to people, updating people here in New Orleans. After that, you'll be off to Europe.
Yeah, we're New Orleans is a great conference. It's always fun. It's a fun city, first of all, and people, people here are looking for new opportunities. I think we have a luncheon on Tuesday tomorrow, and it's full.
Slammed?
It's we don't have any more tickets left, and we have to expand it actually. But and then we from here on Thursday we head over to Zurich for the precious metals conference there, and then to Kai Hoffman's deal in Frankfurt.
Okay.
So I can't remember what he calls it now.
And I think we're going to do some X Spaces, as my audience knows. We've been doing that. So make sure you follow us on X and follow them there, because we're going to do some more updates.
You haven't done one of those yet, so I'll be looking forward to that.
Yeah, they're super easy, and it's a big audience, different than our YouTube. But okay, well, Rick, you know what? I'm going to take you back so you can get back inside and boots on the ground. Really appreciate.
A lot of investors to talk to.
Yes, you do. I came by earlier, and I think they were doing a video thing.
Oh yeah. They were big groups. They just move around with the room. So really well attended this year. I'm very impressed with how many people are here.
Yeah.
Of course, it's $4,000 gold. So.
Yeah, I mean it's pretty exciting times right now. But also, and I know this is very cliche to say, but with that pullback that did happen, like I know people myself that didn't want to buy things when they were at 52-week highs or whatever, right? So now you get a little bit of a pullback, and then gold seems to be flirting with that $4,000 an ounce mark, which is a pretty big spot to hold. But it gives people a break where they can take positions.
Well, as you say, so gold, if you just do rough numbers, it corrected 10%.
Right.
The equities all corrected 25%. And that's across the board. That's Newmont and Agnico Eagle and all the way down to the junior explorers. So yeah, I think things are on sale right now, and it's I think people can sort of smell that in the water. So
that's right. Good time to be at this conference and to head to Europe. Thank you very much.
Good to see you again.
All right.
Always a pleasure.